Before we begin, let's walk through our webinar platform together. Each of the buttons at the bottom of your screen relate to sections in the On24 console. The speaker view is where you will see our presenters throughout the webinar. The slide view is where you'll see the accompanying slides. Our poll questions will also appear in the slide area. Be sure to click directly on the slide to answer poll questions throughout the webinar. You can resize these widgets for a larger or smaller view. You may follow along also with a PDF version of the slides that can be found in the related content widget. The CPE criteria section details the requirements you must meet to receive full credit for CPE in this session. To obtain CPE, you must do two things. First, be on the live webinar for at least 50 minutes, and second, respond to 3 of the 4 polling questions that will appear throughout the presentation. You can track your viewing progress in this Earn CPE widget on your screen throughout the webinar. By registering for today's event, you will automatically receive an email after 24 hours with a link to download the slides and a link to view the recording. Additionally, if you meet all the criteria and qualify for CPE, a link to your CPE certificate will be in that email as well. Please remember that it does take 24 hours for that email to be automatically generated, so look for it sometime tomorrow afternoon. For CPE-related questions, please reach out to cpe@yptc.com. In the related content section, you can access any accompanying materials for this webinar. This includes a PDF copy of the slides and many times will often include related resources. Reactions from our audience throughout the webinar will float along the console screen. Use the Q&A section to ask questions directly to our speakers throughout the presentation. In the speaker bio section, you can find more about our presenters, including their contact information. If you need technical assistance, please use the help button below. Many times, technical issues can be resolved by opening the webinar in Google Chrome or refreshing your browser. Finally, the evaluation button contains our post-webinar evaluation survey. Here is where you can share your commentary and feedback on the presentation. We hope you enjoy our free webinar. Now, let's get into today's topic.
Hello, everyone. Thank you for joining us today for our webinar, Faith in Flux, Sowing Attendance and Revenue Trends in Faith-Based Organizations. My name is Rebecca Richmond. I'm an associate in the Dallas market and our Faith-Based Organizations vertical leader. I have over 13 years of experience working primarily with faith-based organizations in various finance leadership roles, from controller to fractional CFO. I'm an active CPA, and I earned my bachelor's and master's degrees in accounting from the University of Texas.
And I'm Ashley Garcia. I'm a manager in our Houston office, and I lead our housing and shelter vertical specialization. I'm a CPA in the state of Texas, and I earned my bachelor's degree in accounting from the University of Houston. Prior to coming to YPTC, I oversaw governmental and nonprofit audit engagements, including single audits. So today, before we get started with our content today, let me tell you a little bit about who we are here at Your Part-Time Controller. We are a professional services firm that specialize in nonprofit financial management for over 30 years. With our goal of helping our clients sleep better at night, our services include day-to-day accounting and bookkeeping, financial reporting, data visualization, and implementing best practices, and that's just to name a few. We currently serve over 1,900 clients located throughout the United States, as well as clients in other countries. We have 13 regional offices and growing, and we proudly serve clients all over the country with our remote YPTC Anywhere department. A little bit on our learning objectives. We are going to analyze current attendance and revenue trends in faith-based organizations. Then we're going to identify some strategies to help organizations mitigate the impact of these trends. And then we're going to follow that up with summarizing some best practices for how faith-based organizations can monitor attendance and revenue trends so they can proactively address those concerns. So our first poll question today, who is joining us? Do we have clergy members, board members, finance members, or are you just here in spirit? I know we are going to have a lot of different types of individuals here today, but I really do think that everyone will find this webinar to have some great information. Don't you, Rebecca?
Yes, I do. And of course, feel free to click on the screen. I know that might be different from what you're used to. But yeah, actually, I find that when people come to the table from various roles in the organization, whether they are in finance, an executive pastoral leadership role, or a member of the board, it helps to bring different perspectives to the table, and it helps to address maybe some questions that need to get answered, or it helps in decision making. So yeah, I definitely think everyone being at the table is helpful.
All right, give a few more minutes to get those answers on the poll, and then I'll kind of see. All right, mostly we have allotted individuals for finance. I like we have 17% of you are just here in spirit. Board members.
That. I've been there too. All right, so diving into our first objective, which is to analyze the current trends in faith-based organizations. What we wanted to talk through is the data sources before we get to that information. So as most of you know who have worked in a faith-based organization, you're not required to publicly disclose information, and most of you don't. So it is our sacred duty to go and find the information for those who have publicly disclosed information and compile it here. What we'll be looking at today is the trends for churches of various denominations and non-denominations, as well as for mosques. And so in terms of the church's research data, that is coming from Lifeway Research Team, which sends out an annual survey to over 10,000 churches in the United States. And the results are self-reported, and then their research team verifies the information and produces a result of the top growing churches in America by numerical gain and percentage gain. So we'll be looking at those percentage gains here in a minute. And then in terms of the mosques, that data comes from the US Mosque Survey, which is a decadal survey conducted in collaboration with a multi-faith coalition and numerous denominations headquartered out of Hartford Seminary in Connecticut. So that research team sends a survey out every 10 years, the next one coming up here in 2030. And they sent it to over 2,800 mosques of the Sunni and Shiite American Muslim community. So we will be looking at that here shortly. And what we find is that when it comes to attendance trends, it depends. So it depends on your denomination and your geographic location. We did notice that for those who self-reported in these two surveys, of course, there's others out there, but we'll be focusing on these. No data was reported outside of the continental states. And again, you'll see certain faith traditions are not yet represented. So for denominational attendance in the Pacific Northwest and the Central Midwest is overall declining. And we have an anecdotal case of a Lutheran church in the Midwest, for example, that during COVID lost 45% of their attendance. And as we know, it's been a couple years since COVID, and they are still experiencing a 30% decrease in their attendance. And now on the other side of that, we also want to acknowledge that some faith-based organizations are increasing in their attendance. And overall, what we're seeing is that for non-denominational churches and certain specific denominational churches and mosques, their attendance is increasing in the South and in the Northeast. So here's where we're seeing those attendance trends. And you might be able to see where you fit in this data visualization that we're providing here, the results of those which are experiencing growth. So what we see first is for non-denominational churches, which were the leading faith-based organizations in terms of attendance growth, are experiencing as high as 95% increase in Florida, 70% increase in Virginia, followed by the Southern Baptist denominations, which are experiencing up to 41% growth in North Carolina and 37% growth in South Carolina. And then after that, the independent Christian churches, which are experiencing up to 52% growth in California and 43% growth in Arizona. And then followed, last but not least, the Assemblies of God denomination, which are experiencing up to 47% growth in Florida, and an honorable mention of 19% growth in Washington, just to kind of go against the trend, right? And then what we're seeing with mosques is this is aggregated information. So the dots you are seeing for the churches are the actual churches, And then the dots that you're seeing for the mosques are aggregated information, where we're seeing the highest growth in Michigan of 65%, followed by Ohio of 57% and up to 43% in Georgia.
All right, so now we want to know a little bit about your organizations. Has your faith-based organization experienced a change in attendance in the past few years? Have you seen a growth, a decrease, no change, or you're not really sure? Rebecca and I are both from Texas, and based on her, what she just talked about, Texas is experiencing some growth, especially in the Dallas and Houston area. Rebecca, that's pretty much in line with kind of what you're talking about here today.
Yes, and even though we didn't put specific client data in that infographic unless they self-reported, our clients are also following in trend with those denominations and that growth. And then just to that last point, I do know of a faith-based organization, even in my own neighborhood, that has chosen not to track attendance trends necessarily. And so for them, it's not at this point something they are tracking or measuring. But if I maybe go on a few more lunches with them, we'll see if I can convince them to start tracking that.
Let me give a few more minutes. While we are waiting for the poll question, give it a few more minutes. If you have any questions that you want to ask Rebecca or myself throughout the training, put those in the Q&A and we'll get to them either throughout the training or at the end. All right, let's see. A little bit of a mix. Seems to be there's some increasing, some decreasing, and some no change really. So,
okay. Well, that's really interesting to see, and we'd love to hear some feedback from you here after this webinar. If your denomination or non-denominational organization fell within those lines. So the other thing we wanted to talk through is what could be some factors that are affecting the attendance decline that we're seeing for some of these faith-based organizations. And so what we are seeing here is that, again, it tends to depend. And by and large, for self-reported information, there tends to be a difference between the perspectives of the younger congregants and the perspective of the older congregants. And so what we're seeing is the younger congregants are seeking ways to help individuals and families experiencing poverty or their faith-based organization to address doubts about faith or mental health issues. Whereas for older congregants, they mostly have not resumed pre-pandemic levels. Some of that in part is a loss of trust because of headlines of alleged immoral behavior of leadership, or they are simply replacing attendance, in-person attendance at their faith-based organization with other activities in their community. And so as we have seen on some of those attendance trends where there has been a decline, we are seeing a correlation between the decrease in attendance correlating to a decrease in revenue of total donations year over year or month over month as a result of that. And so with that, we want to dive into strategies to mitigate the impact of these trends. And I am seeing some feedback on the chat in terms of was information not available of a specific denomination that maybe hasn't been presented here. And again, just to reiterate, it was all self-reported information. And if we received anecdotal feedback, we included that as well. But by and large, we found information that was publicly available in terms of the entire US region and not necessarily specific to one state or to one faith-based organization. So great question, Anna. So in terms of the strategies that we wanted to talk through, and I do see how there might be some questions as should I be watching this or how does this pertain to me? We wanted to talk here more broadly about overall strategies that can help your organization, whether it is a religious organization or a faith-based organization, which is specifically a place of worship. So those two topics that we want to talk through is expense mitigation and revenue diversification. And so again, these strategies are not meant to be exhaustive, but they are suggestions to keep in mind for future opportunities. Okay, so in terms of expense mitigation, this is just meant to kind of get those wheels turning as all of you come to the table, those of you who are board members, those of you who are finance members, those who are there in spirit. I mean, everything helps. We first want to talk about evaluating programs. So our programs covering the costs. And at the first pass, what you want to do is evaluate a way of measuring specific programs that are in line with the vision of your organization or the mission of your organization. Obviously, having a way of tracking those for the ones that are more significant or are so near and dear to the mission of your organization that you're going to track it regardless of maybe the bottom line, is you want to ask yourself, is it at least breaking even? And so part of that, of course, we are all seeing an increase in inflation costs across the board, but have you revisited the program fees? And so when you are looking at those, are you evaluating it based on when was the last time there was a program fee, or maybe even with some of your colleagues to ask them for similar programs or events that they are doing, what does that look like for them? And so what we want to do in part with this is to open up that conversation and have some open dialogue of what is working and what may not be working. And then, of course, as we mentioned earlier with the Lutheran Church in the Midwest, which is not representative of all Lutheran churches, but some of the Lutheran churches were experiencing attendance decrease. If you are seeing 30%, 40%, 50% of an attendance decrease, that's high enough to warrant the conversation of reducing some of your costs that are controllable, such as staff. And so if you're seeing where congregants are not returning, or not attending the events or the programs, then that would also correlate with not requiring as many staff members. And we know that that's a difficult and challenging conversation to have as faith-based organizations. But if it's something that your organization needs to talk about, we just want to say it has been done in the past and it has been navigated well. The other thing that can be done is instead of completely reducing the staff, you can reduce the hours proportionately. And then, of course, for those who are not seeing as high reductions in their attendance and in their total donations, the reductions can be moderate. So what that can look like is delaying hiring activities for non-essential positions, or again, reducing hours proportionately. All right, so in terms of revenue diversification, we'll be discussing two here in a little bit more detail later. But what we wanted to talk through is that through some of our own clients and other information, there are faith-based organizations partnering with other nonprofit organizations to help address social issues. And so we consider this a win-win because the faith-based organization receives additional revenue streams and it addresses those generational attendance factors that we discussed earlier, where the younger congregants are looking to their faith-based organization to address social issues that concern faith, that concern mental health, or helping individuals and families experiencing poverty, whereas the older congregants who have replaced in-person attendance with other community activities can instead be introduced to a partnership between their faith-based organization and other nonprofits. So to talk a little bit more detail about that, Ashley will give us some additional information.
Thank you, Rebecca. As Rebecca walked through, there are some changes in membership and funding that faith-based organizations are experiencing, which can come with challenges from a cash flow and revenue standpoint. I'm going to cover a little bit today on how faith-based organizations can and are collaborating with other nonprofits. One thing a lot of faith-based organizations do have is land and property. So how can they use this excess land and property, continue to serve their communities and their missions, as well as generate revenue for their organizations? As I mentioned when we started, I lead our YPTC housing and shelter vertical. And some of you may be thinking, why is Ashley here? She leads the housing and shelter vertical. Well, many faith-based organizations are pursuing affordable housing as a way to continue to serve their communities and diversify their revenue streams. There's a significant lack of affordable housing and housing for individuals experiencing homelessness all over the United States. And because of this, many cities and states are passing legislation to make the process of faith-based organizations building affordable housing on their properties easier. From states like California, New York, Minnesota, Oregon, South Carolina, and Washington, just to name a few, they've recently passed legislation to waive certain zoning requirements and environmental objections to make the process and potential for faith-based organizations to collaborate with other nonprofits or build affordable housing projects on their property easier. So how are they doing this? What does this look like? With that shift in attendance, organizations may have under or unutilized buildings into affordable housing. They can lease some of their existing buildings and space to build affordable housing units, or they just sell some of their property to developers of affordable housing. There are a couple of different models that are available and being utilized. One is tiny home villages, which we're going to talk about a organization that actually built a tiny home village coming up. And then permanent supportive housing, which is where they convert existing buildings for affordable housing. And then that is also paired with affordable housing assistance and voluntary support services to address the needs of individuals experiencing homelessness and low-income families. So what are some things to consider if this is interesting to you or something your organization is looking into? What should you be thinking about? Well, you should do your research on the legislation in your area around faith-based organizations and affordable housing. What are the zoning requirements? Also, researching and reaching out to other faith-based organizations who have successfully implemented this model to hear about some of their challenges or some of their successes. There are organizations all over the country that have already built affordable housing or are in the process of building affordable housing, from places like Seattle, New York, LA, Atlanta, and where Rebecca and I are from, Dallas and Houston. That's just to name a few. The next thing you want to look at is what grants or funding is available for this. There are many grantors and philanthropic support available specifically for faith-based organizations to develop affordable housing. So doing research on those funding opportunities. Also researching banks with community lending programs for affordable housing. Consult with legal professionals. Find a firm that specializes in real estate and affordable housing to help you through this. Consult with tax professionals. Tax matters can be tricky and complicated. So making sure that you reach out to tax professionals with experience in housing projects on tax implications, any potential for unrelated business income tax, or any IRS tax status changes. And then research developers and builders who have experience working with nonprofits on nonprofit affordable housing projects, and maybe even some that have experience with faith-based housing. And then we have one big don't. Don't stay in a silo. Don't do this alone. Seek the help of experts in your community, your congregation, and your organization's leadership. All right, like we said, we have a story. This is about Mosaic Christian Community, formerly known as the First Church of the Nazarene, was a church experiencing attendance decline. Prior to COVID, they had about 30 congregants. They had implemented some significant changes and initiatives. One was renaming the church, as well as addressing social issues like food insecurity and chronic homelessness. This church was one of the first in Minnesota to utilize new legislation that was passed called Sacred Settlements, which allowed for faith-based organizations to build housing on their property. And what they did was they built 6 tiny homes. Rebecca was able to meet with the pastor of Mosaic Christian Church. Rebecca, want to tell us a little bit about that meeting and kind of what you talked about?
Yeah, of course. And again, just an example of how faith-based organizations are partnering with other nonprofits such as Housing and Shelter. And so now Mosaic Christian Community initially started addressing food insecurities and worked with programs in local high schools in their neighborhood. And from there, they learned that the students they were serving with food insecurities were also experiencing chronic homelessness. And so that was very eye-opening for this organization. And in terms of when they started addressing chronic homelessness, they were approached by Settled, which is one of those nonprofits, as Ashley mentioned just a little bit ago, that specializes in knowing some of those things about the zoning and permits and building requirements and all of that. And so Mosaic said yes. So one of the things that Ricky learned as part of this process, he serves a dual role as pastor of the faith-based organization and co-leader of the Sacred Settlement. It's just some learning points. So Sacred Settlements is under the church's nonprofit status, and it does have separate funding and reporting for rental income and maintenance costs. But again, as you said, now grants are available to them to offset some of that. They are in year 2 of this pilot program. They were the first to launch it in their state. And costs are expected to break even in these first few years. So that's what we talked about earlier, is evaluating those programs. Are they at first outset breaking even, and then from there experiencing a surplus? And then some other considerations is the faith-based organization co-leaders do create community, so it addresses some of those concerns of their congregants, but they also manage it as landlords on a day-to-day basis. So that's something to keep in mind if you're considering doing something like this with the religious land of your faith-based organization. All right, and another honorable mention in Minnesota, there is a second faith-based organization called Prince of Peace Lutheran Church, which has also launched their own sacred settlement of 2 tiny homes on their property. All right, so this is another diversification strategy we wanted to talk through. And again, we're not saying that you should do this, but what we are saying is to be open to opportunities like this, which may come your way. So we have worked with nonprofit organizations that have partnered with companies who work with wireless carriers. And often these companies who are more familiar with these endeavors are familiar with the wireless carriers, the demand. They often set up net revenue sharing programs with no upfront costs or ongoing maintenance to the faith-based organization. And so what we have seen with our own anecdotal stories is that the estimates, depending on the location and the demand, can range from 1,500 to upwards of 10,000 each month. And of course, as Ashley mentioned earlier, do consider any unrelated business income or private letter rulings that may be out there, which will help determine for your faith-based organization if there is an impact for unrelated business income. All right, so we've talked about those attendance trends and the revenue trends and the impact, as well as some diversification strategies and ways to mitigate that. But now we want to segue into best practices to monitor those revenue and attendance trends. And so we wanted to talk here about understanding and reviewing financial statements, as well as taking that next step and establishing and monitoring key performance metrics, which can be both financial and non-financial. So in terms of the basic nonprofit financial statements, we're going to talk about the financial statements, and it won't be exhaustive. So we have other resources and webinars on our website where we go into much more detail about each one of these statements. And here with this webinar, we'll focus on the statement of financial position as well as the statement of activities. So in terms of the statements, with the statement of financial position, or commonly called the balance sheet on the for-profit side, it's like a picture, and it tells you what your organization owns, which are called assets, what your organization owes, which are called liabilities, and then what's left over if you subtract those two numbers. And then in terms of the statement of activities, it summarizes revenues and expenses for that period. So if you're looking at 1 month, it's going to summarize the revenues and expenses for that month. You could be looking at 9 months now for revenues and expenses through the entire 9 months. And that's commonly referred to as the income statement on the for-profit side. And then the next one is the statement of cash flows, which reports incoming cash and outgoing cash for that period, and it reconciles back to the number of cash on your statement of financial position. It breaks them out into operating, financing, and investment activities. And then last but not least, the statement of functional expenses. It reports expenses by what is called their nature and function. Now, for some of you who are not subject to an audit, this may not be these statements that you regularly work with, or you may be reporting your information on a cash basis instead of an accrual basis. And so you may be seeing your information slightly differently than what we'll be showing here later with a few examples, but we wanted to bring this to your attention. And we're also going to share a way of tracking expenses in a way that if you're not doing so by functional expense, you can do it with this other approach. Okay, so having talked about those basic nonprofit financial statements, what we wanted to dive into a little bit is what are those key pieces of financial information that your leadership, your board members, your executive finance team members may need to know. And so the information that should matter most would answer these questions. For example, how much cash do we have? And not just the cash, but the liquidity. How are we doing in comparison to prior periods or to budget? To kind of get those conversations going, are you comparing them? And then lastly, what is our financial story? So with the statements that we're going to be looking at, it'll focus on those questions. To answer this first question of how much cash do we have, we're talking here about liquidity. And what liquidity looks at is how quickly can we turn something into cash. And so this will help us to determine, do we need to do fundraising or other activities to cover any shortfalls that we might anticipate? Do we have an operating reserves threshold or a policy as it pertains to excess cash that we may have? And in general, is this going to help us have resources available for any unanticipated needs? And then next, we're also going to look at some examples of how we are doing in comparison to prior periods or to budget. And so with this information, what we're looking for is not just what are the numbers, but what other numbers in comparison to where we thought they would be or where we were at this same time last month or last year, for example. So let's dive into some examples here. All right, so here is a faith-based organization where we are showing the statement of financial position. And so as you can see at first glance, we are working here with about 4.1 million, both in fiscal year 24 and fiscal year 23. And so as we're looking at their cash amounts, we can see that they have 720,000 available. That's great, but it's not the end of the story. So if we just take a little peek down here, we can see that they have net assets with donor restrictions. And again, just as a friendly reminder, only the donor can restrict donations. And so with that 230,000, really this organization only has 490,000 of unrestricted cash available for any shortfalls that may come up, for operating expenses that are going on. And so we just wanted to get those juices flowing in terms of what's restricted and what's not restricted with cash. Next, we're looking here at their land and their fixed assets. So this is great. They have 1.7 million in land, and they have fixed assets, which is your buildings and other facilities of approximately 1.7 million as well. So that's a healthy number, but it's also not the end of the story. So here, if we just take a peek at the liability section, in other words, what they owe, is you can see some accounts payable for some vendors they need to pay, some deferred revenues probably for some programs and events that are later in the year, and they've taken in that revenue, so they have to set it aside. But there is no debt. There's no mortgage here. So they have all of this land and all of these buildings available, and I wonder what they could do with that. So yeah, as we mentioned earlier, this organization would be a great candidate for partnering with other nonprofits since they have those facilities and the land available. All right, and then with this financial statement, last but not least, we can see here on the variance column how they're doing in comparison to prior year. So yes, we're sitting at a balance sheet of 4.1 million, but once we start putting in the budget numbers or the variance numbers where we expected we might be in comparison to last year, the total cash is 80,000 less. And so again, down here in the net assets section, we can see that the net assets without restrictions are 49, almost 50,000 less. So it's starting to put together that financial story that we're gearing toward in saying that, yes, it's a 4.1 million in both years, but we're seeing a change in the cash and the unrestricted amounts available. All right, so here in the statement of activities, we wanted to point out a few things of information that we think is key. So in looking at the unrestricted offerings or donations or pledges, of your organization, they have 650,000, but in comparison to budget, with this particular example, they have fallen short of their budgeted projections of 675,000. And then with that, we look at the restricted offerings or donations, and we're seeing that that is ahead of budget by 35,000. So again, this story is coming together where on the balance sheet, we saw that there was a reduction in net assets that weren't restricted. And here on the statement of activities, we're also seeing that they're getting higher sources of restricted donations instead of unrestricted donations in comparison to budget. And so what we want to talk about there is, as you are seeking out fundraising opportunities or donations, we definitely want to steer you towards seeking those which are unrestricted and available to cover any and all operational needs, and not just those restricted donations that are limited to a specific program or a specific event. And just to wrap up with our statement of activities, you can see here in the change in net assets, which on the for-profit side we would call net income, the organization has a change in net assets of 115,000, which is actually favorable in comparison to the budget of 61,000. So just because you're a nonprofit or even a faith-based organization at that, it doesn't mean you can't budget or expect a surplus in your activities. So let's have faith for a surplus in our budget and in our fiscal year. All right, so in terms of key performance metrics, what we wanted to talk through here is, again, just to kind of touch a little bit on the fact that faith-based organizations are not required to disclose information to the public by and large, unless you're subject to funding that requires you to get an audit and publish it and all of that. So here what we did is based on our own clients and industry averages for information that was publicly available. And thank you to whoever did that smiley face. If you know me, you know I love emojis, so just explode it if you want to. So in terms of key performance metrics, we wanted to highlight here some that are common for faith-based organizations. So months cash on hand, what we are doing there is we're looking at unrestricted cash, like we talked about a little bit earlier, compared to your monthly average total operating expense. And of course, the minimum being 3 months cash on hand up to 6 months cash on hand. And then for those of you who are tracking attendance, giving per adult attendee. Oh my gosh, I love it. Thank y'all so much. That's an answered prayer, literally. So giving per adult attendee, where we see what is that total monthly unrestricted donations per adult attendee, and then new donors compared to prior period. So this is more of a count of those new donors. So it's still a number, but not necessarily a dollar value, where you're seeing how many people are attending this particular program or this particular service in comparison to prior month or to prior year. And as you've heard me mention along the way, we're either going to compare to prior year or to prior month, because for some of you, you might be newer, and so you don't even have a prior year. And then for some of others who are farther along in your in the story of your organization, it does not make sense to compare your organization, let's say, to 2 years ago or 3 years ago because of the explosive growth or the changes in some of those expenses that you're experiencing, especially if you're in a growth phase where the cost of construction, let's say 5 years ago, in no way bears any resemblance to the cost of construction in this year. And then last but not least, the percent of total expenses. So we alluded to this earlier for those of you who don't prepare a statement of functional expense. You can instead look at your percent of total expenses. And so what we like to do for our clients is to help organize their chart of accounts between which of those are personnel, which of those are programs, which of those are administrative, and which of those are facilities, so that we can get that snapshot of how are each one of those categories doing in comparison to total expenses for that period.
All right, for our next polling question, what is a key performance indicator your organization is tracking? Are you looking at your months of cash on hand, your giving per adult attendee, the number of new donors, or maybe just the number of smiles? What are you looking at from a KPI standpoint? Rebecca, we had a couple questions come in, one of which that we didn't talk about when it came to attendance trends, but is there any indication from your research about the number of individuals who are watching online opposed to in person?
Right. So those self-reported surveys tend to include in-person attendance and not necessarily those of online. It depends on the source of these streaming services and how accurate those might be. I know some of them have a little bit of an estimate to those numbers. And also the reason why online attendance is not always included with in-person attendance, and great question, Pam, on that one, is because online attendance doesn't always correlate to giving. And so what we wanted to do is to isolate those attendance trends which tend to correlate with revenue trends. So if we're seeing where a newer church or a faith-based organization is going more digital, those costs of transitioning from only in-person to now digital services provided, there's a cost to that and a learning curve to that. And so even if they see a change and an increase in their online attendance, that may not always correlate to that, to the revenue trends that we're seeing.
Rebecca, another one we're seeing are, and you kind of touched on it, that most of the data that we were able to find due to churches and faith-based organizations not being subject to having to have an audit or having to file a Form 990 for most of them. Are there other data sources for other faith-based organizations beyond churches and mosques?
There are, and so those are going to have to be kind of hunted down in terms of where the repository is. So for example, for the Church of Jesus Christ of Latter-day Saints, they tend to track that information and publish it online. But then in terms of accessing that information in aggregate year over year, the data doesn't always compare on a one-to-one basis. So for example, in looking at that data for 2024, it was provided by continent, by region, by state, and then in comparison to 2023 was just overall the organization. And so as we fine-tune the approach to the data, I do think that more organizations will be represented here. But when I did do high-level searches on other faith traditions, there was a tendency to follow these trends. And then, of course, there's other faith traditions where there isn't necessarily an organized central database or data hub. And on that one is more based on relationship and direct communication to see in case that faith tradition is a little bit more disaggregated. So we would love to find more information, for example, on the attendance and revenue trends of Buddhist temples, and we've started those conversations, but there's not necessarily a centralized data hub for that information.
All right, we're going to go forward. Let's look at some KPIs your organizations are tracking. A lot of you are tracking months of cash on hand. That's a great KPI to be looking at. Giving per adult, number of donors. I like the 7% of you that are tracking number of makes me so happy. It makes me smile, so talk my smile too.
Yep. I love it. Okay. So here are some non-financial key performance metrics. Again, we kind of alluded to this a little bit humorously in the previous poll question as to the number of smiles. Not everything has to be a dollar amount. And so here with this faith-based organization, they had September 2024 goals shown here, and we'll just talk about 3 of them in the interest of time. We're seeing where, for example, in attendance, they're wanting 6%, they're experiencing 6% attendance, but their goal was 10%, so they're close, but not quite there yet. In terms of groups, we're seeing where this organization was hoping to have 20 and they have 17. And then lastly, as they're monitoring the per person giving per month is 200, and they've reached that goal. So congratulations to this faith-based organization on achieving some of their goals there. And again, you want these to track to the mission and the vision of your organization. All right, so in terms of industry benchmarks, this is based on our client information and that which was self-reported. So again, we went and the Finance Fairy went and found these and compiled them. And so for personnel expenses there, we are seeing full-time salaries, part-time salaries, benefits, and payroll taxes. Of course, for some of you members of the clergy, the faith-based organization should not be collecting the FICA, and so that was for free. And definitely consult your tax professional on that. But on average, we're seeing 40%. It can go up to 50%, and so you can make adjustments here in these other areas. And so for program expenses, we're looking at a healthy organization having at least 30% of their total expenses dedicated to programs, those supplies, decorations, meals and entertainment for various events and programs offered. And then facilities expenses will depend on the region and the cost to get supplies out there. So for landscaping, utilities, non-capital repairs and maintenance, we're looking at about 15%. And then in terms of administrative expenses for fees, insurance, postage, things like that, we're looking at 15%. So of course, those have to add up to 100, and you'll tweak those between what is appropriate for your region. And then in terms of months cash on hand, I mentioned this earlier, where 3 to 6 months is not only for nonprofits, but also for for-profit organizations, the benchmark to follow there. All right, so the finance fairy strikes again. Earlier when we looked at those statements, we saw the statements of financial position and the statements of activities. So what she did is she went and totaled up those amounts according to what was each one of those categories on the percent of total. So this is not your typical statement of functional expense categories. Instead, it's those other ones we talked about for those of you who don't track the statement of functional expense. So we're seeing here that the personnel of this faith-based organization is 43%, which is in line with that 40% benchmark we just talked about, as well as their administrative expenses are lower. So between those two, they're still within the ranges, so administrative of 10%. But then here's another part of the story. They did have a positive change in net assets of 115,000, but 31% of their total expenses were for facilities, and only 16% were related to programs. So the overall financial story is coming together, where those unrestricted donations are not as high as they expected compared to budget, not as high as the unrestricted cash, not as high as compared to prior year. And it could be looking like the programs that are being offered are not necessarily drawing in those congregants or new attendees, whereas their facilities costs are still having a larger percentage than the benchmark would indicate. So, oh my goodness, what would help this organization who has no debt, lots of land, lots of buildings, to offset these facilities expenses? Start partnering with those other nonprofit organizations. And then you'll start seeing the shift out of facilities expenses into your program expenses. As well with that is, as you offer these programs that are more salient to your younger congregants and your older congregants, yes, the program expenses will increase, but your facilities expenses should be offset. You'll be partnering with other nonprofit organizations and just overall amazingness. And then in terms of the month's cash on hand, we broke out, the finance fairy broke out by month what those amounts were. And so now you can see visually that this faith-based organization has cash, and usually 6 to 7 months of cash on hand. And that's a great thing, but also there can be an opportunity here to earn higher rates of return on that excess cash. And so we would recommend an investment policy to start earning higher rates of interest for this organization. All right, so just kind of to bring this to a close, what is our financial story? Just keep it simple, focus on the big picture. You want to report both the good news and the bad news. And the reason for that, it doesn't mean that you don't have faith for things to improve if you're sharing the bad news. It just means you're giving the organizational leaders, your board members, what they need to make proactive decisions. So don't withhold that information and report those operating targets, whether they will be reached or not. Focus on what is material and those key performance indicators that are both financial and non-financial. And don't report on metrics that are not key performance indicators. Yes, number of smiles, we all love that, but your board member may not be able to make something with that decision. And you might have someone that's very passionate about that one thing at your organization, and you know exactly who I'm talking about. But just encourage that person, go start a group about it. Like help us have 18 groups instead of 17 groups, right? but not necessarily on the executive summary to your board.
All right, so how many times did Rebecca and I help you smile or laugh today as our last question? 1, 2, 3, or should Rebecca and I not pursue a dual career in comedy?
You know, there's no hard feelings here. We mostly just want to make it fun and bring information that's relevant to you, give you another perspective. And I do see a question here about some exit fees on cell phone towers. And again, that's where we would encourage you to partner with organizations where that's their specialty. So we have seen faith-based organizations partner with those companies who know that the cell phone carriers well, and they know how to navigate those concerns. So Jean, yes, thank you for your question.
A couple of questions also, Rebecca, on automatic giving. So it doesn't directly correlate to attendance trends. What are you seeing in terms of automatic giving for faith-based organizations?
So again, Lisa, that's a great question. In terms of automatic giving, and may not be directly related to attendance trends and maybe what else we're seeing, we are seeing where faith-based organizations are being more comfortable to ask the attendings or the givers to cover that processing fee, for example. There's a lot of platforms out there that are making it easier for donors to cover the processing fees. And then in terms of giving, it's great when people give on a recurring basis, which tends to increase the revenue totals because they're kind of out of sight, out of mind, and they're giving to a worthy cause. So that's great. But then even though you might be seeing a higher trend in revenue and not necessarily correlating to attendance trends, that's just one of the pictures. And so you'll see, let's say if your total donations have increased over time, but then on your expenses, if your programs are not, as you're tracking those key performance metrics, are not achieving those goals, it could be that you're achieving your revenue goals, but you're not achieving these other metrics that are showing the impact that you're having in the community, for example, the health of your church in an otherwise non-financial matter. So it's great when you do see those increases in revenues, but we don't just exist to offer one service or provide one program. It's a holistic approach. And so you want to definitely still engage your congregants and engage in the community, if that's something that is near and dear to your faith-based organization's mission.
Thank you. All right.
And then Natalie, to your question, the attendance trends were in total, so not specific to other demographic factors. But with a lot of the giving platforms and the donation software systems that are out there, they do track that if that's important to you and it's something that you would want to track internally.
Awesome. It looks like only 30% of people think we're not funny. No, all fun and games. Right, let's take what do we have for key takeaways?
All right, so just to kind of summarize, and thank you everybody for being authentic and truthful. Of course, truth is a virtue among all of us, right? So thank you for that. And just some takeaways from this is we hope that we helped you in seeing some of those attendance trends and revenue trends and kind of seeing where you fit. It always kind of helps to see, you know, we're not alone. We are growing just as these others are growing, or we are not growing like we would like to, just as these others may not be growing as they would like to. And this is not permanent. So again, don't do this in a silo. Like we mentioned earlier, we're here to help with anything that we can help with. And in terms of strategies, definitely looking at how you can mitigate those expenses, diversify your revenues, and then best practices, not only to produce financial statements, whether on a cash basis or an accrual basis, but then understanding the differences between those two. And then what is the key information that those statements can give you, and how are you then tracking what is considered a key performance metric, whether it's financial or non-financial.
All right. If there are any more questions and you want to pop them into the Q&A box, Rebecca and I will answer those questions. But before we do, our contact information is available through On24. If you have questions that are not answered, we'd love to hear from you. So please reach out to our emails, but you can also contact hello@yptc for more information. And,
yes, thank you. And thank you for all of the great questions and the interactions and the emojis. We love it all. Thank you so much. We just want to be helpful.
I don't see any questions coming. I'll give it a few more minutes for any questions. All right. Well, on behalf of Rebecca and myself, thank you all for attending today. We appreciate your time, attention, and participation. We hope you have a wonderful rest of your day and a wonderful rest of your week.
Thank you, everybody.